Hey guys, what's going on? Kurt Capper here with another US dollar update here for you. And it's been a little while since I've brought one of these videos or analysis updates to you. Obviously today we got the CPI data came out, missed, and as a result the dollar is down. But before we even discuss what's going on here right now, let's take a walk back down memory lane here for a little bit and just go back from the beginning and look at what we had first started talking about and the walkthrough that progressed. So back here in late May, June, we were talking about how the dollar was in the downtrend and headed lower. So of course the next question is, well, headed lower to where? And at that time I said 24.50 is your first reference point. And as a result, it took a little while to get there, but as you can see, we did in fact move down there as the trend remained down. There was an attempt right here in the middle of June where we tried to break down, failed. The bulls tested how strong this downtrend was, and in fact it held in. We rolled over, continued heading to the downside here, and the bears took full control from that point on. Right, we went sideways here a little bit as we stayed below the 8 and the 21 day before breaking down into that initial target level of 24.50. Now, prior to getting here, I had sent out another video update saying that if we break under this level, which it seems likely would happen based on certain conditions that were taking place at that time, the next level would be $24. And as you can see here, we are or have tested that level. And I also said at the time, if we come down to $24, we're probably going to set up a bounce from there. And the reason I was thinking along those lines is simply because if you look at the larger time frame, right, 24 is a long-term level of support from 2016. You've got a pivot low here. So that's why I was saying this should develop or produce some kind of tradable bounce off of 24. That, in combination with the fact that we've been down multiple weeks in a row, suggested the odds were more likely that this 24 level would hold at least for a bounce. Now, fast forward here to today, that's all taken place. I mean, literally almost to the T, this played out as we detailed along the way. So hopefully you were able to take advantage of these opportunities, whether it was shorting multiple times on the way down or even being able to find an opportunity off this 24 level. In fact, when it gapped up above the recent highs here after touching 24, when it gapped up on August 4th, that was your first clear signal that you were getting the demand to really start building in terms of confidence. So there was your little tradable bounce, assuming you didn't just buy it off the 24 level, because that could have been done as well. In any case, we've now rallied up into resistance, and with the CPI data coming out and missing, we've got a weak dollar here as it looks poised to head back down to retest 24. Now, as I've said, I think that we're going to spend a little time here, maybe the next 2 weeks or so. I think we spend in this area here between 24.25 to 24 bucks. Then, however, if the trend remains intact and if nothing new from a chart point of view develops to change this, I then think we break under 24 and then we head down towards this next level I have drawn around 22.75, which again would be a significant move lower, but again, we just let the charts speak to us and tell us what they're doing. Now, why would I be looking at 22.75? Well, if we go to the monthly chart, you can see 22.75, roughly speaking, aligns with the top of this breakout that occurred back here in 2014. So it's the top of a breakout area, which again is going to be viewed as support. So that's where we look for the next wave of selling to take us down into. So this is what I will be looking for. This is something I'll definitely be watching closely because, again, as we hang out in this area here over the next, as I said, I think 2 to 3 weeks, into the end of the summer, right? Then after Labor Day, we might start to see the action ramping up, barring any political turmoil or increased from where we are here right now. Political turmoil that could certainly accelerate the process. But overall, I think we, as I said, hang out here next 2 to 3 weeks into Labor Day. And then once everybody starts coming back, we'll start to see things getting back in gear to the downside. And based on that, again, 24 will be breaking. We'll head down towards 23 to 22.75, and then we'll see what's happening at that point. But hopefully you guys have found these videos helpful as they continue to lay out the blueprint here for just simply following the trend. I mean, it's nothing magical. It's, in fact, almost so simple that most people almost don't want to believe it, but it really is that simple if you just follow what's being spoken to you and not allow yourself to get stuck in the past. Stay objective, read the information that's coming forth to you, and you'll be just fine. So, as I said, hopefully you found this whole video series that we've been doing here for the last couple months helpful. Hopefully you've been able to make money from it, and we'll continue to do this for you, even if it's not the dollar, maybe something else that's setting up, whatever the case may be. Continue to provide you with this this content that is both educational and actionable. All right, so until next time, guys, have a great day, enjoy your weekend, and we'll talk again soon.